Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see what we got going on this morning. Let's get the, let's take a peek at, get that peak up there again. You can see the dollar index there on J4X. And let's see, what do we have here? And then over here we have the beta up on the screen at the same time. I don't think we see that. Let's double check that. Where are you? Where's the beta at? There it is right there. Okay. Now that's on. Oh, I see where it's at. There we go. And let's do this. And minimize that. And there we are. There's the beta. Let's get that a little bit wider so you can see that. You can see over on J4X on your far left there. You see it's at 103.07 at 11, something like that. You know, just kind of bouncing around. This is we're not expecting a lot out of the dollar. We just expect the dollar to be firm. That's about it. It's overpriced as far as we're concerned. We go through that every day or every other day or every couple days. We mention it over and over. It has to drop underneath 100 to start to head into the undervalued. And that doesn't mean it's going to stop there. It just means that's how we view it here at Chicago Quant Technologies and on Dukascopy. So let's get that up. Oh, I don't see the chat line. Let's get that chat line moving along also at the same time. There we are. So you can see it's been firm for the last couple of days. They're starting to, I don't know if I could say they're starting to get used to the idea, but it's starting to become an obvious conversation. We're thinking at most they start to cut rates somewhere in May, June, or July in that area. I think there's a meeting in May, so more than likely they may cut the rates. It's about, was that May, June, July, August, September, October. Basically, we're talking, and then the elections are in the first week of November. So that's over 6 months before the elections. So that makes sense. And I guess, we'll be looking at the way the Federal Reserve and the Bureau of Labor Statistics and, all the data. And then from the data, hey, Robin. Good morning to you, and thank you. I saw it came over last night. And so that's where we really are, is that we're not really heading towards the this 7 rate cut. I seen yesterday, I was looking at the Fed futures stats, and they were showing something like maybe 5 going on 6 now. They're starting to back off from the 7. They were over 7 at one point. It was like 0.78. It wasn't 7.5. So it was, it was like 7.5 is 7 cuts. And so now it's moving down into the 50s. So we're looking at a little more than 5 cuts, and we're thinking that it'll be 3 cuts. And the market is, as I was listening to somebody in Davos communicating about it and suggesting this and that, and I was thinking, in essence, the markets always like to basically anticipate. They like to try to jump ahead by 6 months to 9 months. Okay, so 9 months from now, the election's over with. We're clear sailing to who is the president, what the policies are going to be, and so markets are trying to anticipate what's going on in the future, and that's what we're really seeing at the moment. Now, they assumed automatically in the beginning. They assumed that Biden was going to be president, which is awful hard to assume. I don't know why they would, but they were. Now the betting, when you look at the Las Vegas betting, Trump is the lead, and then Biden is second, and Nikki Haley is third. And don't ask me how she's third when DeSantis beat her last time. And we'll see on next Tuesday. We'll see on next Tuesday if she can beat DeSantis. I don't believe she's going to beat Trump. Trump is polling about, something like, he's like 50% up there, and she's polling in the 30s, and I think DeSantis is in the 20s. But that was the same way in Iowa, and the next thing DeSantis beats her. So Vegas money now is betting that Trump is going to beat Biden, and I would assume that means they understand what the policies are generally going to be, since obviously Trump was a better president than Biden, and everybody knows how the economy was under Trump versus Biden. So that's why the money is now starting to bet. Now the question is, are the bonds? Like I saw a great article this morning where they said, there's no reason to chase the bonds anymore. Bonds are not going up anymore. So in other words, the price of a bond is going to start to move down. That means the yield, price goes down, yield goes up. Okay, so it's the other way around. The bond price is going to go up because the yields are going to be going down. In other words, we're kind of finished off in the fives. There's a few analysts out there who are talking about 5.75 or 6, but overall it seems like we're in this area, and I don't think we're going to really change much. I don't think we're really going to rise anymore. And when we look at the Federal Reserve out of Richmond, which does the gross domestic product stat, they're looking for 2.4% coming into the end of December. And so we're going to start to see that towards the end of the month. And we're getting towards the end of the month now. Today is January 18th. So we're getting close to that. It's come down. It was going to be as high as 4.5 and 5 at one point, and it's been dropping and dropping. And then the first quarter, they're looking at like 1.25, 1.5 on the GDP. And so, that slows the economy down, lowers, or at least keeps inflation flat. And, flat where it's at. It's not gaining any. Well, it's still gaining. But it's not accelerating anymore. It's still increasing. Inflation will still be increasing. But with the magical political words, the way they describe things, they call it a cut. When it's not, it's going up in value. We'll see. It's been up a little bit. It's been hot, and we'll see how that plays out. Where's the chat line? How come I don't see a chat line? Oh, there's the chat line. Yo, Robin. Yo, yo, yo. And thank you, and thank you. So that's where we kind of stand at the moment. The bonds are going to... And let's take a peek on the bond. Let's see what the bond looks like this morning. Which one is it? It's the BZF. Isn't that Brent? No, there it is. ZB. There it is. There's the bond. You can see bond is kind of flat. Got a little red dot. You can see that it's in a daily sell for a couple of days, and it's in the weekly sell now over the last week. Same thing going on over here. Let's put that up there. We go to that, and there is the great experiment. Let's see. And there's the bond right there. You can see it's kind of flat line, just like over on the beta. And you can see it's flirting with the weekly sell right there, just underneath it by a hair. And again, when this is going down, interest rates are rising. Okay, so we're seeing a little rise in the 30-year. Not a lot. I mean, it got up to 125 and change, and now it's trading around 120 and change, almost 121. We kind of think, and if when we tighten it up, so you can see further back, you see we've had a really great rally. This is when they started thinking inflation was backing off back in September and October. Let's see how far back we can get with that. I guess that's about it. That was the went down to 109. That's the price. When the price goes down, interest rates are rising. So in other words, it's less valuable because it's more expensive, and vice versa. Now we have the interest rates have run all the way to 125. The price of the bond has gone to 125 from basically 109. And that meant that interest rates, as this is rising, interest rates are dropping. And so now you see again just a little back and fill. And I guess even if we did a Fibonacci sequence type thing, let's throw one of those fun boys on there. One of those bad boys. Right there to there. And as you can see, it's come down from, this is a 100% move, and that's why it says 0, 0, 0. And you can see it's at a 0.236, and there is the 0.382. It hasn't touched that, and there's your 50 percentile of 116.28. So we're not looking at a 50% retracement yet. We're in between the 0.38 and the 0.23. So I don't think we're going to see much. I think we're going to bounce along around here. We'll bounce along this. I'd be surprised if we got to the 50 percentile. I really think that it is pretty clear that the economy is slowing. I'm hearing it everywhere. And so there's not much of a reason now for that to go on. Unfortunately, the inflation rate, the core inflation rate is around 4.1. And I think the Bureau of Labor Statistics shows the month over month. I think they show that at 3.9, maybe 3.8, something like that. It was supposed to be 3.6, came in hot. And that's why this here, the bond itself is heading down. In other words, and the interest rates are rising again because they were a little disappointed that this long, consistent move from the almost 10% area of inflation down to the 3.25 point, and then jumped right back up. And we watched the core rate, which the bonds look at. So now this is seeing the 4.1, and it's saying, well, inflation is still full 4.1. It's gone from 1.4 all the way up to almost 10. And then I think the core never got to 10. I think it was year over year. And then it got to the core was 9 point something, 9.6 or something like that. And so now you see the inflation rate increasing again up to the 4.1. And it's like, oh man, it's still 3 times greater than when than Mr. Trump. That's the problem, is that the inflation rate is still 3 times higher than when Mr. Trump was in there. So that's the thing that really hurts. All right, so basically that makes the clarity of why we don't think we're going to see more than, say, 3 cuts. And it'll start, probably more in May, June area than it will start in Feb, March area. All right, I hope we got that across. And let's see, what else can we say about the dollar? I guess that's why you see the dollar rising, because interest rates, and they call it the interest rate differential. Interest rates are rising. And so with them rising, that's what we see right there. This part right here, I guess we could even do one of those cute little circle things when you go like this. Right there. Because it is going down, interest rates are rising. And there is the 50 percentile mark right there where the green line is. And I don't think we're going to get past that. I imagine we might play with the 0.38. That would be about a 1/3 back down again in price. And that's why we see, let's go over to here. That's why we see, let's do this. All right, I'm thinking we're going to save it like this too. Save workspace. And then save workspace as. And this way we can look at it when we go and try to understand why currency pairs are moving the way they are. This is one of the only, I guess you could say this is one of the strongest fundamentals that is still being respected in the markets today. And then we go over to the actual dollar index itself, and you can see it's basically working in the opposite direction of that. See how it's been doing the long drive down, just the same way that the bond, let's go back to the bond, there it is in October. I think that's the high, and that was the low of the bond, right? Yeah, so there it is right there. So there's October right there. And so you can see how that's been moving down. The US dollar has been losing to other pairs trades. And then we go over to the bond, and that is the October low. right there in the reverse. Right there. There's the October low. Just the total reverse. And it's classic. We're able to show you the real clear and clean view of the fundamentals, which, has been a really tough, I guess you could say it's been very, very tough ever since quantitative easing started in 2000, at the end of 2008, going into Mr. Obama's administration. So since quantitative easing has started, we've had the strangest things, like interest rates go minus. So instead of you getting interest on your money, you pay somebody to hold your money instead of getting interest when they hold your money. Now, I'm going to say that one more time because I have to laugh when I say it out loud. And that is, when you hand your money to somebody to hold it, normally they would give you interest. But with quantitative easing, instead of them giving you money or giving you interest on your money, you pay them to hold your money. So not only do you buy the bond, but you also pay interest to them to hold your money. Talk about crazy. And that went on for the European Union. That went on all the way up until, I don't know, was it about 4 years ago? Something like that. 5 years ago, 6 years ago. I guess it was like 5 or 6 years ago, something like that. Under Mr. Trump, that started to swing back to rationale. I guess we could go. I wonder if we can get the Boon. That was that's the biggest bond traded in Europe, and then the German Boon, and then I guess it would be like the British Gilts. They would be they would be the other. And so I think that went on all the way up until basically Mr. Trump in 2016. I guess it was 2017, 2018, basically. And then it started going the reverse. So, all right. And I'm sure everybody would like, when you give a bank or a business your money, they would pay you interest, not you pay them interest at the same time. And that's not counting buying the bond. All right, I think I've got that off my chest for the morning. And so from there, let's go take a look at the euro. See what the euro's up to this morning. Stick it up on J4X. Right there. And you see the euro has been drifting down. Not a lot. Almost has that same look. There's the December, and there's the October. You can see there's the October point. Let's see if we can get that up on the screen there. You see that same low, matching up to the bonds, matching up to the dollar index, the whole thing, just basically the same game. There it is, there's that low. And so, matter of fact, you notice that was in September. It really started to put its low in. Matter of fact, we could do this. Let's go and take a look at it and see what our math said about it back then. And that's what we try to emphasize here is our algorithm is a very good algorithm. It's one of the best algorithms I've ever seen. So, I know I invented it, but it is what it is. And so you can see here, we were in a sell. Let's just push this over a little bit more. You can see we were in a sell, riding down, going into that low of the bonds right there in October, and we jumped into the buy near those lows, and then basically the euro started to go up in value just like the bonds did. That same look in October, right there. You can see the fast jumped in there right with it. The slow took another week or two to get into it, and that's why we pay attention to the slow. And you can always use the fast as a warning. And it's like a warning light that starts to flash yellow. And then when the slow joins in, you've got a very high statistical average that it's going to go in that direction. That's what it did. Bounced around, still stayed in that buy in here, and climbed up. And so that's why we have the weekly on the bottom of the chart. And then that's why we have the daily in the middle. And think of the fast as the yellow warning light. Matter of fact, in many ways, Probably should, instead of it being blue, we probably should have it as yellow, because it gives you that warning that that it's actually. Let's do that. Make that a bright yellow like that. As you can see there, it's a warning. You know, the warning gave you a warning as it was breaking down a couple weeks ahead of it, and a warning that it was turning up. And so that's that's the way we look at our algorithm. And what else can I say? I don't think I have anything else to say about it. If anybody has an opinion, I'd love to hear it. Like, good job, Doc, or shut up, Doc, keep on moving. Doc, shut up, get going. All right, so you can see here we've been 4 days in a sell. Let's widen that out now so you can see a much closer situation. You can see 4 days in the sell. It hasn't really gone anywhere. And again, we're really convinced overall that it's very quiet. And you can see right here, we're coming into Thursday now. And you can see the zero line is just being pressed. We're just under, as you can see right there, very small, minus 0.00098. And so obviously you can tell that my math was designed for atomic theory and string theory more than it was designed for trading markets. But 45 years ago, we found out that it worked really well on markets. All right, so that's bringing the big into the small, or bringing the small into the big, or as I like to say, where the rubber meets the road in the friction universe. All right, so there we are with the euro right there. All right, let's jump over to, we'll go with the British pound now and see what the British pound is up to. And remember, traders or viewers or whatever you want to call yourself, if you would like to see something that you follow, just tell us and we'll just throw it up there instantly. We have no problem jumping off this rhythm we follow and jump right into what you would like to know about or see or get an opinion of or whatever. You know, we're always open to jumping around. Be jumping, we be jumping. All right, now from there we see the cable right there. And the cable, also 4 days in a sell. You can see it's trying, this is bouncing even firmer up. And you can see the weekly has not pierced. It's still fighting to stay in the buy. So we know that we've seen more weakness out of the euro than we have out of the cable. And the cable is definitely, you know, let's take a look at it. It's been basically fighting right there. This is the euro cable pairs trade. And you can see it went into the sell here. The euro started to lose. The daily jumped on here. Where did the daily go? I think the daily went buy, sell, and then went into a buy, and pretty much, you know, then it did that little flop and then back into the buy again on the daily. And so, you know, it was definitely giving us warning signs over and over and over again that there was strength coming in, and it did. You see the euro climbed up. Then we finally, as you can see, the warning light, I guess you could say right there. Let's put that in there as the bright yellow. I wonder if we can make that thickerish. I guess we can't. I guess we could go like that. If we do that, does it let us make it thickerish? No, it still doesn't. But it is the warning light, and it tells us that, you know, when it broke down here, you know, it joined in with the slow instantly. Matter of fact, that's always a fast warning sign when they both join in like that. Ouch! You can see that smackdown. In this case here, it jumped through the zero line and then failed again right there. And as it went into the buy right there, the yellow was warning us, and the daily was warning us that you don't want to be long. It went into the sell right here. So it was lots of clear signals on the algorithm, and we were really happy that it kept us, you know, clear and safe. Yeah, you know, you can't win every one of them. Our percentage average win is over 85% out of 100, so that's not too bad. And when using options and using binaries, it makes it even a higher percentage win. All right, and you can see there, this is the euro cable trade. You can see it didn't last long, just 1 week in the buy right there, and then right back into the sell again. And you can see the cable has been pretty strong. Hasn't taken out these lows yet. That's interesting. I'm not that big a bear, and I'm not that big a bull on the dollar, and I'm not that big a bear on pairs trades, with the dollar. So as far as we're concerned, there's going to be a lot of sideways action that gives you opportunity to make some nice wins. All right, and then from there we'll go over to the Swiss. Now the Swiss is, to us, has become like the best of the pairs trades. As far as I'm concerned, it really tells the truth. And let's put it up on J4X right there. And there's the Swiss. And you can see it's going in the wrong direction. In other words, it's been losing against the dollar. The dollar has been gaining. And when you look at this, the Swiss, it's been the best of all the produced. It's gained more than any of the others. It's gained more than the cable, and it's gained way more than the euro against the dollar. So it's been a very good pairs trade to trade. Very sensitive, to the action. How many times, traders, have you been, you bought something saying, I know that the dollar is going down, and so I chose to use, the Australian dollar or whatever, the British pound or the euro, and it doesn't really move that much. Whereas if you use the euro, the Swiss, chances are when the dollar's going down, that Swiss is going to be going up, and you're going to be very happy with that pair, and vice versa. So, matter of fact, you could probably take a look at, when you want to short the, or this way, when you want to be long dollars, be short the euro. And when you want to be short dollars, buy the Swiss. That's probably the best combination of the two. Pairing off between the three different pairs. Using the euro when you want to be short, or I guess if you want to be long dollars. Let's try that again, because maybe we'll call that the title today, because we are really talking about a lot of fundamental stuff here. So I guess we could say when you want the euro drops the most against the euro in the wrong way, and so when you want to be long dollars, you would sell euro, and when you want to be short dollars, you would buy Swiss. That's what it is, and that's how that pairs trade would work out better for you. Obviously it outperforms it. We know that already. We did a webinar on that where it outperforms that way, instead of just, let's say you were just trading the Swiss back and forth solely. So that is for us currency traders, one of the ways to, remember, not all currencies always they may move together on some level, but they may not gain as much. And you'll be like, man, I knew that dollar was going down. And so I should have bought the Swiss. I shouldn't have bought the euro. And that's pretty much the way to look at it. I guess we could say euro, Swiss, dollar, pairs trades, or euro, Swiss, dollar, pair trades. That's the title today. I like that, because it's kind of neat, because we've identified this before, we've talked about it, and now we really have a much clearer picture, because we're showing you the movement of the bonds going up and down, we're showing you the dollar index going up and down, and we're showing you the way the Swiss moves much stronger than the euro does against the dollar, and vice versa, how the euro moves weaker to the dollar even when it's gaining. So that's the title today. I've already got the title. I love that. I'm going to just send that right over right now. And so, and that is a good way of looking at it, at least in my head. All right, now from there, we'll go over to the yen. I heard I guess they're looking for rates to go up in Japan. And that's why we're seeing this big bounce back up. It's playing around the 48 area. Came from the 52. And let's show you how Mr. and Mrs. Fibonacci, or Goldthorpe's magic number, and we believe, which is a really interesting and bold point of view, and we'll go into that another day, unless someone wants to ask a question on it right now. We believe our formula is older than the Fibonacci sequence. We really do. So in other words, you don't really invent things, you discover things. And so our math, I think, is definitely ahead of the Fibonacci sequence. And then the Fibonacci sequence seems to catch up to our math, which is fascinating. And so you can see here, there is that 45-year high right there. Let's see if we can put that mouse to it. There's the 45-year high. It plays all the way down to here and makes a bounce. And then we see it gets past the 2-3. Matter of fact, you can see the first day it runs up to it, then drops down, bounces off of it. Then it cuts right through the 3-8, closes on the 3-8 right there. Let's widen that out even more for people to see. Because this is, fascinating stuff all the time. In my head, maybe you think it's boring, but in my head, it's totally fascinating the way the laws of nature function on all levels, from the small to the great, to the weak to the strong, and vice versa. So you can see here, it comes, makes this low. We do another Fibonacci to it. And then the next thing you know is 4 days later, off of that bounce, it stalls out at the 0.23, just a little above it. The next day, it tries to trade underneath it, fails, and closes that day on the 0.382. Then the following day, it hits the 5.0 right there, the 50 percentile, closes on the 3.8 again, and then starts to break down, trying to get to the 0.23 right there. It fails, or whatever, and you can see our math right all underneath it, how it acts throughout that whole event. You can see our math is leading it, not following it. And then you can see here you see the bounce up to here again to the 50 and failing and bouncing in between, and now it's bounced off the 3.8 too, and is driving towards the point. It's closed at the 0.618, and now it's even going to the what I would like to call the WD Gann extreme, and that is the 0.76. Actually, Gann also on some slopes would talk about the 0.78 as an extreme, depending on the time frame. And Gann was very fascinating about that. WD Gann, a wonderful market technician that had played with Fibonacci and the spiral and the whole bit for throughout his whole life. And then he teamed up with, think of that, he teamed up with R.N. Elliott from the Elliott Wave. Now, Elliott was much older, but they were both on the edges of contemporaryism. And then they merged with Jones, the father of hedge funds. And they had an office, they had 3 offices in Midtown right next to each other. Up around, I think it was around 47th Street in Manhattan. And so Jones, W.D. Gann, and R.N. Elliott had offices up there all the way up until the late 40s, and then I guess it was R.N. Elliott died. Then in the 50s, I think Gann died, and Jones is known as the father of hedge funds. So fascinating stuff when you look at this, and we're always telling you that we see our math leading it more than in other words, you see it go into the weekly sell here, and what do we get? More falling, and that's how we've been using the predictor of our math combined with the spiral and the sequence, and our math confirms the direction, and then we do a sequence, and that's how we've been picking prices for, unfortunately, not unfortunately, but unfortunately the Turkish lira has been following it perfectly. So as the Turkish lira went from like 3 and 4 and 5, our math was projecting its upwardly spiral. And when we picked 21, from 12, it got there. And when we picked 33 from 26 or 24 or whatever it was, or 21, it got there. And now we've stopped doing that. I feel like I'm jinxing the poor Turkish lira. So we don't give projections anymore unless you ask for them. I'm not going to volunteer them anymore. I just feel bad. The poor Turkish people have seen their currency go from 1 to 33. And we've been on that whole ride. That's why we call it the Great Experiment. Because our math has led us to understanding where it's going. And you can see it here. We're in a daily sell. That's the all-time high, and the all-time high close was the day before that. And you can see we haven't closed at an all-time high now for 5 days. And we're hanging around the 33s. In this case here, the poor thing got up to 33.41. We gave our projection, I think, to 33.5 maybe, or 33.3 or something like that. And our projection was just right, and that's when I've stopped doing it. I don't do the projections because I feel sorry for the people in Turkey with watching their currency do all that. And only if you ask will I give you a projection. Franzel, hi, how you doing? We're having a fun time today, talking about fundamentals, looking at which pairs trades are the strongest and the weakest against the dollar. It's a good old day for a Thursday. We're only 1 day away from TGIF, which is, thank goodness, it's going to be Friday. All right. So from there, what do we do? Where's Storm at? Storm is here. Storm. All right. So from there, we go over to, we kind of start to slide away from the currencies unless someone wants to see something. And we go to the number one brick in the world. And there it is. There is the South African Rand. It seems to have topped out and gone and made new, 3-month highs, 6-month highs? I don't know. Let's see what it is. I guess it's October, November. But that October has really been a noisy month, wasn't it? Let's just move that over a little bit more. There it was past the highs, something like a 10 or 15-year high or something like that. Let's do this. Let's go to the South African Rand on J4X, and let's see if we can get a flavor of what the high was by going into the 19 itself. Let's see. So that'd be USD ZAR. USD ZAR. Where are you, ZAR? There it is, right there. Let's make it the whole page. Let's put the weekly in there. Right there. And I'll have a sip of tea while we're waiting for it to show up. Remember, it's doing all those calculations with the stochastics, the fast and the slow. It's doing the hinky-ashkies. It's doing a lot of math at the same time. That's why it's taking a while to get there. There you go. So, was that 1919 something like that? And that was back in the beginning of this year. When was that? That was April, March. And that one is in 2020. That is April, March again. And then, so we're really looking at some high territory there with the South African Rand. Look at that. Whoa! What insanity was that? That was some insanity there, wasn't it? Let's take a monthly look to it. See if we can wash that insanity out. I don't know what they've done to themselves there. I mean, that's a very positive thing when you think about it. If it came down from 40 down to just 6. But there was no doubt at one point back in 2004, the product was in the 204 area. That's pretty. I mean, I'm sorry. In 2004, the thing was in the 6 area, so there was only 6 rand to the dollar, and today it's 19 rand to the dollar, going through that same problem as Turkey, but not as bad, of course, because if it was the same thing, it would be 4 times greater. It would be like 80. Would it be? So we go from 1 to 33. So 4 times. I guess it would be 4 times 4. 1 to 33, so 33. So that would be a lot. I mean, I don't know why my brain is not doing that, but it's like 120 something. So luckily they are not as bad, and and when it comes to their experiment down there, the poor product is only going from the 4s to the almost 19, almost 20 area. That's not bad compared to going from the 1 to the 33 area. And if you put them in the same relationship, I think it would be 120, which would be like, ow, ow, mommy, stop that, it hurts. Yeah, mommy, it hurts. Let's go back to the weekly, right there. And then let's go back to the daily, right there. Ow, mommy, it hurts. Let's see. Franzel says, was there a catalyst for the NASDAQ to move higher today, or was it a technical move? That's a good question. Let's go take a look and see. Doc loves looking at everything. So, and then we can come back to whatever we're doing. We'll go to the metals complex. But let's go take a look. So, that's not it. Let's go to this. Right there. Say okay. Okay. And let's go to there. And let's put the Tech 100 up right there. There it is. And you can see we're in that weekly buy. So we always, we didn't think it was going to be that bad a bounce. There is some speculation. Because of such a gain last year, the 44% gain in NASDAQ, that if it was just a sideways market this year, they'd be happy. Also, at the same time, there's a lot of talk of, what was the other stuff I was hearing? I heard something else. Yeah. Oh, yes. Because of the Magnificent 7, which were up like 141%, the 7 stocks in the index that were up a total of 141%. Because of that, they think that they're just going to be going sideways. So we ended the year. Where did we end the year? That was that the last day in December, and there's the first day in January. So we ended the year at 17,000, and so we've traded down to 16,500, 400, something like that, and now we're back to 17,000. So they're only looking for like a sideways market. Maybe it'll go to 17.5, something like that, and then back off again. There's no doubt with the polls the way they are, and Mr. Trump winning the election with a landslide on I guess it was Monday. So with that landslide victory on Monday, they tried to take it down, and it didn't work. And it closed firmer. And today we are above the 0 line. You can see our math right there. And what else can we say about any of it? We're still in the weekly buy. Is like from here all the way across, we're in a weekly buy. So I would say that it's doing what it's supposed to be doing, and that is sideways to up. And that would make more sense. And you can see here, this is a higher low right there from there. And this is a higher low from there to there. And so, and I guess you could go even further back to here. You can say this is a higher low here than there. So in other words, we're not going to see a lot of weakness in the NASDAQ. We're just going to see a lot of, we have a couple words for it in the trading in the trading world. We call it consolidation, and we call it digestion, like when a snake or an animal or ourselves, when we eat something, it digests it and it distributes it out to the muscles and gets rid of the waste. And so a lot of times in the marketplace, we like to look at it as a consolidation. Sometimes we call them envelopes. Sometimes we call them sideways chops. We have a couple of different cute little nicknames for these things. So I hope that helped you there. Let's see. I was just taking a nap and then saw my long position explode. Yeah, that makes sense. Yeah. So, it wouldn't surprise me if we go symmetrical. So it closed at, what was that, 1703, and it traded as low as 16. It closed as low as 16. That's 36. And this one there is 03. So that's that's 600 points. So it fell 600 points, and now it's basically retraced itself back to that area. And if it breaks through there, you could take this and figure that we go like this. We take the Fibonacci of it on both sides. We look at the symmetry of it. So there's a strong feeling with a lot of money managers that we're not selling off yet. They think that we're really there. Like on the S&P 500, there's talk of 4,600, and it's trading right now at 4,800 basically. And yesterday it got down to 47, 43. So same thing with the Nasdaq. They don't see any particular reason for it to fall apart. If there's going to be selling, it probably might be in the tax side of May. And imagine, by then Super Tuesday is over with. And so in other words, Mr. Trump will be very clear to be the total front runner in all different ways. And that will put muscle into the upside of for the money managers, because there's a lot of capital still sitting on the side. Does that make any sense there, Franzel? Yeah, maybe no. And we can take a look at some of the other stock indices if you'd like. Let's go over to gold while we're waiting for you to give us a response. Because the South African rand is let's put the rand up on this. Yeah, there it is on the daily right there. You see the South African rand is moving up. When it's moving up, gold is going down. And so you can see here, it's been moving down as this has been moving up. So, that's the norm. And that absolutely sounds like Rocky Balboa. Good old Rocky Balboa from Philadelphia, the Southpaw. Absolutely. That's right. Yo, rock. Yo, rock. All right. As Rocky Balboa. Let's see. From there, rock. Yo, rock. All right. From there, we'll go over to silver. Silver doing the same thing. Matter of fact, it's even, I guess you could say it's even more pressure on it. In many ways, when I look at silver and then I look at gold, it's like this micro versus macro thing going on, And so silver really reflects maybe a much more sensitive side of the metals complex. In other words, when you look at the silver gold pairs trade, when they're really reaching for the metals in an industrial way, silver takes off and starts to beat the spread. When they look at the metals in a protect my equity way, silver doesn't outperform. And I've always noticed that. All right. So from there, let's see, where do we go from there? Take a look at copper. And you know what? I want to save that. No, it doesn't matter. And then so there's the copper. You see copper on that slow gliding path down, as we saw the Chinese GDP drop, and it emphasizes the issues and problems that they're having with real estate and businesses and so forth. So copper kind of shows weakness when China is weak, and that's why we're not seeing a $4.5, $5 copper. We're seeing a $3.5, under $4 copper, and that's what the problem is. Absolutely, huh? Hey, yo. Yo, yo, yo. And then last but not least, I saw the bounce this morning in platinum, which was pretty cool. Platinum's giving a turnaround curve there. It's starting to show some life. Again, I don't understand how anybody can short that product. I look at that and I go, wow. I would be terrified if I was naked short that. Just because of it being over 50%. Is it 100%? It's 100%. No, 50% the price of gold. And I would look at that and go, ooh, I don't want to get trapped in a short squeeze. And that's the flavor of the April contract. It's making a nice bounce there. Bounce, bounce, bouncy, bouncy. So, let's see if we can change that. I can see that I'm looking at the exchange. It's at minus 0.90. Oh, now it's minus 1.00. And so, I always get nervous thinking, ooh, I would not want to be naked short that product. No way, Jose. All right. From there, where do we go? We go over to the stock indices. So there's the S&P 500, and you can see. Oh, we didn't take a look at the energies. Let's take a look at energies. There's crude oil. It's trying to lift up, but failing at it. It took out yesterday's high, but it's now below yesterday's close. The weekly is dancing, as you can see right there, trying to get into the buy. It's at 0.25. That's it, a quarter. And then we go over and we look at, where do we go look at there? We go to natural gas. Oh, you know what? Let's put up Brent. And there's Brent on the beta. Where's that mouse at? Right there. There's the mouse. You see, it's in the buy for a couple of days. And it's trying to turn red there now. And the weekly is pressing down at the same time. So we're seeing some weakness in the Brent still. And then natural gas, where is it? Natural gas right there is pushed into the sell the last couple of days, but the weekly is still in that buy. Right there. Same situation. Pressing down. You can see it's been having, it's been pushing and pushing these last 3 days very solidly. The Hinky Ashke's picked it up 4 days back. And you can see here the slow is at 24 and the fast is at 7.8 against 24.6. So that has backed off. We've seen, what was it, the energy company down in Spain has backed off underneath 26. There it is now, 25.79. We're seeing this thing going from 28.5 down to 25.79. We're seeing prices drop in the natural gas arena. And so, it's all very positive. Very, 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 very positive. All right, and then let's go take a look at the S&P 500. Right there. Trying to lift up, and you can see it's above the zero line right there. And then let's take a look at it on the beta. Beta. Hello, beta. Right there. And it's trying to lift up also. Now the daily is still riding down, and the weekly is on the edge, just on the edge of going minus. But it's still bullish. And we'll see how this starts to take off and see if we get the daily to join in, like the daily's trying to join in right there. And then we can go take a look at, what was it? Did we do that? I think we didn't do that. Let's take a look at the NQs for Franzel. And you can see there, the daily was in a buy, and it's still in a buy. It never got into the sell on the beta. And it was flirting with it today, but it's not there. And when we go and look at it again on the old platform, right there, Activate, you see it dropped into the sell yesterday and it's trying to lift back up. And then when we go over to the beta, right there, Remember, traders, if you wanted to have a free adventure with the beta, just contact Robin at Chicago Quant Technologies. Right. See if we can get that right there, and you can be able to see it. And I guess I go like that, and then I go like that, and there it is. If you want to have a free trial of the beta, and you can see the old phone number there for Robin and so forth. And that is the end of the webinar. And I think we really had a great fundamental webinar. Very great fundamental webinar. I loved it. You know, we were able to take a look at the bonds. We were able to take a look at the the currencies, how they relate to each other, which one's the better one, which one's the worst one to trade as a pair. You know, I thought it was a very good currency webinar today. I was very happy with it. It wasn't many questions, but at least, you know, Franzel jumped in and said, hey, you know, why am I seeing my NQs look good? So I was able to pass that along. All right, traders, this is Doc from North America. Catch you all tomorrow, same time, same channel. And this will be, it'll be TGIF. Thank goodness it's a Friday. All right. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Trading friends. All right, traders and watchers, we will catch you tomorrow. Same time, same channel. Somebody think up an idea to ask me. I'd like to talk about new things. Ta-ta for now. Arrivederci.